Aloha fam, Crypto Chris here. Hope you're having a beautiful day and thanks for tuning into my channel. Investing is important. Did you know the US dollar isn't backed by gold? It's been backed only by the Federal Reserve since 1971. Over the last 2 years, the government has printed more money than they previously had in circulation. So if you have extra, it's probably a good idea to put that money to work to compete with inflation, right? Most of us probably already invest, but what is the point of investing? To generate and protect wealth. Today, we'll be discussing the differences between the traditional stock market as well as cryptocurrencies. As an investor, I believe the preference really comes down to your risk tolerance. When you buy into a cryptocurrency, you're investing into the code and the future potential of its blockchain. When you buy a stock, you're investing into an already established company. With both investments, the hope is that it will increase in value. But why and how? Today, I'll go into the pros and cons of both. I believe this will help you better evaluate and decide which one is best for you. And if that sounds cool, please like, subscribe, comment, and let's get into it. How are they valued? The value of cryptocurrencies and stocks both depend on the supply and demand, just like anything else that people want. With stocks, there are many other factors that go into evaluating the price, such as financial statements, balance sheets, mergers, news, liabilities, assets, and cash flow. But at the end of the day, if the demand is higher than the supply, the price will go up. Last year, we saw meme culture absolutely pump AMC and GameStops to really high levels. Now, some may say it's overvalued, but at the end of the day, it really comes down to the supply and demand, right? People are willing to pay that price for that asset. Not only is crypto's value based off of hype, it's also influenced by its usefulness, the potential of which the world is only starting to see. Last September, El Salvador became the first country to adopt Bitcoin as legal tender. And more businesses in the United States and around the world are also accepting Bitcoin as payment as well. Ethereum is used for things such as smart contracts, NFTs, and decentralized apps. Some pros and cons. A lot of cryptos are listed on dozens of exchanges, making them a bit harder to manipulate compared to stocks where they're only listed on the NASDAQ or the New York Stock Exchange. We all remember that fiasco last year with GameStop and how Robinhood essentially shut down their entire market, not allowing people to buy or sell their assets. Well, with multiple exchanges, this may have been avoided. Cryptos can also be traded 24 hours, 7 days a week, where stocks are limited to only business days and certain hours. The fees for crypto is usually much less than stock exchanges as well. And with stocks, you kind of have a better idea of what the price is going to be based off of its market cap and history. Whereas cryptos have much less history and are more volatile. However, the return on investment is usually much larger with cryptos. So, what is the difference in owning a stock like Google compared to a cryptocurrency like Bitcoin? Well, with cryptos, you actually have ownership, possession, and control over your assets, not just a representation of ownership like a stock. Since you never technically own that stock, you can only view its position via exchanges like Webull, Robinhood, or whatever else you use. Stocks you're not able to send to friends or family. With crypto, you can actually send it to anybody, anywhere in the world at any time for a small fee. Now, some stocks do allow voting powers and some do pay out dividends. The concept with dividends is if the company is profitable, the shareholder will benefit from those profits in the form of a dividend. Well, dividends amounts has substantially decreased since the 1950s. And you might be asking yourself, why aren't companies paying out large dividends? Is it because they aren't successful or profitable? Actually, no. Historically, the entire economy has gained substantially more profit. But companies like Amazon, who are extremely successful, have never paid out a dividend in their entire 30 years of existence. So if you own multiple Amazon stocks, you actually don't get any benefit from the company if they are successful. The only opportunity you have is selling at a higher price down the road. In my opinion, if you're a brand new trader, stocks may be the safer bet as it has less volatility, and if you have any experience trading, The opportunity in crypto is much better overall, and the benefits behind this technology is a huge plus. Who knows where we're gonna end up. One thing I do wanna say before I sign off here is always to remember to take profits on the way up and be prepared for volatility within crypto. That's all I have for today. Hope you enjoyed it. Hope you learned a little bit. If you could, please like, subscribe, comment. Thank you so much for your time. I'll catch you guys on the next one on Monday. Hope to see you there.